The risk of investing in property. Is property investment a risky business? Hi, I am Jaco Grobbelaar, the founder and managing director of Prosperity Enterprises. There are many risks when you are investing in property. You have the market fluctuations, the fact that the economy, interest rates, or government regulation can affect property prices. Even though property tends to keep its value well, prices can still fluctuate. Then of course you've got vacancy risk. You've got the fact that you could sit with a property that is vacant for quite some time and that can cost you a lot of money. Then there are tenant issues. The fact that you can sit with tenants that don't look after your place, or alternatively, tenants that don't pay you. There's maintenance and repairs. A property doesn't stay beautiful forever and actually needs work on a regular basis. Things break and need to be fixed. There's leverage risk. The fact that some people leverage too high and can then not afford the shortfalls on the property and end up losing the property or selling the property for much less than what they would have wanted to. There's regulatory changes where things can change in government regulations that can affect you as a property investor. And then there are unexpected expenses such as levies, special levies, rates and taxes, etc. Property is also a very illiquid investment, which means that it's very difficult to access capital that is in a property. And then there is, of course, location risk. The fact that you cannot move a property from the location where it is based. The risk in investing in property really comes when you start using leverage and when you have a shortfall on the property. Because this is where the property is costing you money monthly and where you can find yourself in a position where you cannot afford the monthly shortfalls of a property. These risks, however discussed, I still think that property investment is a great investment. Property is tangible. It's something that you can see, that you can touch, that you can use. It's got very consistent returns and it tends to keep its value very well. And it is a basic human need. So going through the risks that we've discussed, even though there are market fluctuations and market fluctuations can be a risk, property tends to keep its value very well. And if you buy property at the right price, you are probably going to sit with an asset that continues to increase in value. When you buy right and you market your property for the right price, vacancy risk becomes a significantly smaller risk due to the fact that you will most probably be able to place a tenant quickly. When you do good vetting and you make sure that the tenants that you place in your property can afford to rent from you and has a good credit history, you are probably not going to sit with so much tenant issues. Even though maintenance and repairs are a real thing, you can budget for it and you can, for example, allocate 1 month's rent to repair and maintain your property. You can also make provision for unexpected expenses, and if you rent your property out and generate a good enough rental yield, the risk of unexpected expenses also becomes significantly less. It is Casey Neistat that said, the biggest risk is to take no risk at all. Is property a good investment? Absolutely. Are there risks? Absolutely. But you can hedge yourself against those risks by being an educated and experienced property investor. If you would like to connect with us, click on the link in the comment section and book your one-on-one consultation with us, or book for an upcoming seminar near you. If you like this content and would like to receive more of it, remember to like, share, and subscribe. Thank you.